Good morning, everyone. Before we get started, I just want to draw your attention to the risk disclaimer at the bottom of the stream. Trading futures is risky. Trading any asset is risky. It's particularly risky on a day like today. Nothing you see on the stream is financial advice. Everything you see is educational. Um, Nothing that you see is also happening in real time. The stream is 10 to 15 seconds variable behind live, so anything that you see me doing here has already happened in the past. With all that being said, we had an absolute bonkers overnight session. I think a lot of it was driven not by just all of the events here in the US this week, but I believe the Korean stock market, which has driven a lot of the tech volatility in recent months, was down almost 10% overnight before I think they staged a some kind of a government intervention and or um, stock market monitoring service. So not really sure what that means, for them overall, but it looked like their market did get a little bit of a bounce in response to that news, and the Nasdaq pulled up out of its kind of steep overnight dive as well. I was taking a look at some of the what I would call more of the AI forward names last night. Seagate, SanDisk, and some of those were already down, you know, 12 to 15% during regular market hours. Seagate had earnings after the bell, and so it was up a little bit more than the others. But the rest of them, it was just they were getting pretty torn apart, even in the overnight stock session, which is for those stocks in particular, I think is not super liquid. Um, we have a lot of different events today. Obviously, the stream is titled FOMC. That's coming here later in the afternoon. We won't be live for that. We contemplated watching it live as sort of like for entertainment value, but kind of settled on that like I don't really want to be encouraging people to trade that event. We can talk about that more a little bit later as the NASDAQ opens up here. Um, and trading at breakneck speed already, I see. Yesterday's session started off kind of similar to a lot of the other sessions this week. We sold off at the bell and put in some new weekly lows before rallying all the way back up through the opening range high and then just chopping to death. I caught a little bit of this up move and unfortunately got caught in some of this chop yesterday. And if we zoom in on some of the moves from yesterday, there were just um, so many bounces, and I was working off of this imbalance level here at 960, and as you can see, it held it a few times cleanly, but mostly just rotated around it, and you got some of these violent pops, violent reversals. Um, it's just a really, really tricky environment right now. And you can see what the range looks like when I sort of unexpand it. So that's the overnight for the NASDAQ. Um, if we zoom out just a little bit, the overnight session is really just a D-shaped session, which makes a lot of sense going into FOMC later this afternoon. There's also some mega cap earnings after the bell. I believe Microsoft, Meta, Apple, and Amazon all report, as well as a few chip makers like Qualcomm. So there's just a lot of information coming in for the market in the next, basically at the end of this session. There's more earnings tomorrow. I'm not 100% sure of what those are. I know that Apple, I think, is reporting, but it's kind of a bonkers week. And you can sprinkle in a little bit of volatility from conflict in the Middle East as well. I know that Iran was attempting to bomb U.S. bases again. So the market has a lot of reasons to be very cautious. And when people get cautious and it starts to move like this, the depth of market starts to thin out. There tends to be less people who want to interact with it, and that just kind of like snowballs into more volatility as it takes less and less to move price in one direction as another. So I'm telling all of you this because I'm also saying it to myself out loud. I got a little bit chopped up yesterday, so I plan to take it slow today. There's an outside chance that I won't take any trades, but um, if we get down, I would love to see us. My favorite kind of like FOMC play, and I don't have any data other than observation to support this, is we sell off or we rallied, whichever, I don't really care, but we get pretty far extended from the point of control and or where the most volume is happening for the day. Um, and then some point, might be too late for this stream, but an hour and a half before the announcement, if we're really directional, price has a tendency, in my observation, to kind of drift its way back up to wherever the middle point is, as people don't want to be caught, super short on a sell off at the lows before the announcement or at the highs. So my expectation is violent chop, which is incredibly difficult to trade. Um, I just have a hard time believing that the market is going to get super directional with what's coming after hours and with FOMC. But we'll kind of see how that plays out. On a higher time frame, um, we had a sell off earlier in the week, and since then we've basically put in a D-shaped profile for the rest of the week. Um, there's a little bit of volume that was done at the highs before the sell off, but that's pretty far away. That's all the way up at 28,606, so about 700 points away. Definitely doable if tech earnings come out and are on the positive side. When we bounced yesterday, I'll zoom out a little further here. Yesterday's lows, or this week's lows, were around 27,639. And that was basically right at this high volume node from the last week of April. I was actually looking at um, top edge of value as we sold off near those levels, and we just didn't quite get that far. There is another spot. I don't think we'll get there this session, but close to 27,000, there's just a tiny bit of overlapping value here. It's a really narrow area. I want to call it 27,100 to 2750-ish. So, I mean, if they get it that close to a whole number, I think 27,000 will probably trade. But this is an area that I would be interested in terms of buying a bounce. But that probably won't be happening, at least during this stream. FOMC could send it that low, but I just don't think it will with tech earnings after the bell. So, yeah, I was not. I looked at the overnight session right before I went to bed last night, and I was like, oh man, am I really going to trade that tomorrow morning? So I'm here. I have it up on my screen. Um, Under no obligation to touch it. But I do think it's going to be a bit of a wild one. Something to keep in mind as well is the thing that really trapped me yesterday, taking multiple stops in this area, is that we really compressed range at the end of the session yesterday. So, off the low was like almost a 400 point move. And then we compressed inside of like 100 to a 75 point tradable, I want to call it lightly tradable range at the end of the session yesterday. And so, for somebody like me who was like trading part of this, I was looking for 30 to 40 point pops, scalping off of some of these imbalance levels. And when we started to compress down to where the bounces started to be closer to 15 to 20 and really only larger than that if you got a perfect entry, it just changed the environment really at the end of yesterday's session. So something to keep in mind always, that like just because the volatility at the beginning of a session looks like one thing doesn't mean that it's going to stay there. And I think yesterday's price action towards the end of the session was very indicative of the market in a holding pattern as we come into the heavier news session today. So far we're looking at like only a 60 point opening range. I can't do math. We're looking at like 100 in 30, 160 point range. So moving around a little bit, but really just hugging the point of control at the moment, which is also as if you needed any more confirmation to be careful touching this and think that it's going to be choppy. Um, the midpoint of the overall session, including the overnight, is right at the point of control, which is like 27,911. Um, I don't know if any of you, this is maybe an obscure reference. I used to trade pink sheet um, OTC stocks way long ago. You almost can't trade them anymore because they're all gray market, so they don't have any bids to be able to look at. But when I started trading, like in 20, would have been like in 2018, 2017, um, as you do, as you discover different parts of different markets, I was like, oh, I can buy way more shares of a company that only trades at like 50 cents, right? I'm sure there's no risk involved there, but uh, those markets are incredibly illiquid. They're incredibly dangerous because it just doesn't take very much money or size to like move them around. But what made me think of it was the point of control being at 9/11. There was a thing amongst those OTC traders that they would watch the time in sales because the time in sales would be so incredibly thin. You could watch 4 or 5 trades execute in an hour. It's incredibly boring. Um, but there would be odd lots that would come in. And one of the popular ones was 9/11. And people always said that if you saw a 9/11 print, that it was going to be indicative that news was coming afterwards. And it was like, I mean, it's one of those like, if you think that it's coming every single time, sure, you're right once in a blue moon, but I don't think anybody actually did any data or research to figure out whether that was correct. But yeah, those markets, they used to be quoted just like, you could type in a pink sheet ticker into Thinkorswim or at the time, I think I was really just trading with TD Ameritrade at the time, and uh, you could just buy them. There was no there were no warnings. There was nothing. It was just like, hey, look at this really cheap stock. Uh, and I think that enough people, enough investors probably got hurt and burned by what are a bunch of really scammy companies, and when like call it 15 or $20,000 could move one of those stocks like 30 or 40%. It's just really dangerous. And so they've moved them since then to I think what they call the gray market. Honestly, I haven't even checked in years about whether you can still even interact with or buy any of those names. Um, but they're now basically quoteless, which basically means that you'll see the company name and then you can just hit buy, I guess, if you want to, and you really have no idea what price you're going to get filled at either on the buy or the sell side. So that obviously discourages um, most people from that. Um, and it just absolutely killed the volume. But I had probably, I don't know, 5 to 10 really good friends that we had a group of people that traded stuff like that for about a year. And then just honestly, just enough people got trapped in stuff that was bad and illiquid or got caught off sides. There's no pre-market trading for those either. So, if news happened to come out the night before or pre-market, you basically just sat there and waited to see what kind of damage was going to happen to your account at the open. Um, so I know some people who made really good money there. I had a friend who took like, I want to say he took like $15,000 to $1 million. Um, and which is, unbelievable, right? I mean, just an incredible run and management of capital on the way up. And I did everything I could to encourage him to take a very large portion of that out of the market, because otherwise you just end up trading more size, you end up risking more, and he gave it all back. So it happens, risk management, whether you're in the futures market or you are anywhere else, is the key to long-term success. There are so many days to trade in the market, that it's just more important for your overall success here to, walk away on your bad days or walk away from sessions, probably like today, that are just going to be much, much more difficult to trade. Um, so we are trying to hold this in balance here from the overnight session. It's like this one right here at 28.66. Um, you're getting like maybe 25-point rotations back up. But like if you look at the overall at the overnight session and how much we moved around, and now we're just ping ponging between the point of control and this imbalance right here, which is a lot of what I expect to see today. And if you haven't watched the stream before, I wait for the 30-minute opening range to get set. I want to see just some price action, see how we trade when we're how we open, what volatility is going to be like. I can take some guesses at what volatility is going to be like looking at the overnight session, but um, U.S. traders have a different feel than than overnight markets for London and for Asia. So just because it was doing one thing overnight doesn't mean it carries forward. It's just kind of a hint at what is probably to come. And already with a couple of sell imbalances on the towards the upper part of the range this morning. Let's go take a look at some of those. 29.36. Basically right where NQ is going to go through right now. Oh my gosh. So there's one at 33, one at 35, and then this one here at 50, which is what they just tried to get close to. So it's basically a lot of these like 100. They show up over here on the delta volume as an amount. When our impact study labels them here, you can't actually see size. You just know that they're large imbalances relative to the rest of the imbalances that you could find through here, because there's so many imbalances. Like almost most candles have imbalances to some level. So we're only flagging the really large ones. But just to say that we don't really know that this was 100 sold here, just because prices traded through there multiple times. And so every time it trades through there, that particular number changes, which is why we actually implemented the impact study, because when price trades through multiple times over and over, it can kind of dilute what could be a very important level. So if it's a large imbalance as it happens, then our impact study will draw a dashed line across price. Also, the speed at which the NASDAQ is trading at the moment, we're like tight range and we're trading incredibly fast, which continues to fully line up with my prediction of violent chop. I'm going to pop on a few more just because we had such a wild session in the overnight. So there's an imbalance from the overnight. We held this the first time early and like basically right at the open, and we just cut it just now. There's two there actually. There's one up high in the top of that zone. That's probably an area to think about during FOMC if we happen to get movement going up. Just the confluence of an imbalance plus high intensity delta zone there is probably something to look at. And then there's one more lower here, right where buyers kind of took over for, let's see, what time was that? Right around midnight. And this is just outside of value here. It's like 27, 788, 790. So I might use this as a kind of first point to see if the market wants to just, I just think that it's going to continue to be range bound and it's just going to keep drifting back towards 27,900. So with that in mind, if we start to get too extended in one direction or another, I think that's something to consider. I'm gonna go take a peek at this. It's gonna be too early for me to buy anything down here, but let's go look at 780 and see what this imbalance looks like. It's an overnight imbalance, so it won't be as large as some of the, yeah, and even hard to see. This is one that got diluted. Exactly why we used the impact study, because it traded through it a few times, which just diluted the whatever level this is, because I can't really see it here on the delta volume chart. But let's see if they react to it at all. Nope. Doesn't mean that they won't rebid it, but didn't hold it on first touch. I'm going to zoom out just a little bit and look at where we are also in relevance to yesterday. So opening right, that low was right below this pullback from yesterday before we rallied and made new highs. So this is at least the start of what I would kind of be looking for as we go into FOMC later, which is the market starting to get directional here, or attempt to get directional here. If we continue to go down, if we start taking out the previous day's low, that's something to keep an eye on. And sometimes this is, one of the things that I've talked about multiple times on stream is like if I'm going to look at, an imbalance level, particularly one from the overnight, um, I'm going to see what price does when it gets there because there's a very good chance that, this imbalance mattered to the overnight traders and, the RTH traders just kind of don't give a shit. Um, so I think it's, for any level that you want to buy, for myself at least, I know that there's always like multiple opportunities in the market. So I would rather watch a level trade for a bit before I decide to get in, rather than just like sticking my bid or offer at a certain level. And if I don't get filled, it can go on without me. I'll look for another opportunity. But I really, really, and I know all of us do, and it's impossible for it to not happen on the NASDAQ from time to time, but I really, really hate getting run over. I really hate having a bid or an offer out there and it just like cuts through me and my stop all in one. Um, and that happened a couple times yesterday, which was finally my like uh my brain being like, all right, just turn it off. It's not going to get better. And I run a tight stop, in this particular volatility, I'll probably need to use a 25 to 35 point stop is going to be my guess. I would love for it to be tighter than that if we see something and have a level to lean against. But it is so volatile and so you're just getting violent pops from either side. That was 21 to say about a 50 point pop there. So also, if any of you traded yesterday's session, um, let me know how you did. Throw it in the chat. I'm interested. I talked to a few different people yesterday, and I heard a fair amount of people who really struggled in yesterday's volatility, and I know that I did as well. The back half of the session was really hard to trade. Um, would almost say that it was borderlining on untradeable. But feel free to throw that in the chat. This is a safe space. So about 5 minutes away from setting the opening range low. Um, just kind of drifting back towards the overnight lows. I'm going to take a look at the top stocks or the largest by market cap stocks in the S&P right now to see what everything looks like. So oil is up, or at least Exxon is up. They might have had earnings. Apple is up a little bit, and everything else below that is pretty flat. Nvidia and Intel are both down 2%. Meta is down about 1%. Adobe's been having a nice run for the past few days. It has some amount of market cap that's noticeable in the Nasdaq. Otherwise, quite a bit of selling, even selling in some of the Dow stocks, like Boeing is down almost 4%. AMD is down 3%. Um, so, and then if we look at the other indexes, the Nasdaq is down about 1%. The S&P is down about 0.5%, and the Dow Jones is actually down over 1%. So there's actually quite a bit of selling going on. Nothing is like super outsized in terms of like, we're not down 3 or 4% across any of the indexes, but sellers are present and accounted for. Currently trying to bounce right out of where we flagged some exhaustion in the overnight session. Um, if you're using ScalperIQ, let me see what my settings are set to here. I think they're set to the default. I actually like to put bars before signal here to 0. Um, personal preference. I want to know the moment that exhaustion flags, and I've actually been experimenting with a lower number for bars before exhaustion. TBD on what that looks like to use that longer term. See where we're at on a higher time frame. This is kind of the third. I hate when this makes it so that I can't re-scroll. Price range, apply. All right. Kind of bouncing out of this already twice tested area down here around 27,650. Not really doing a noticeable amount of volume so far down here, which is not surprising. I'm going to push back into that delta zone. About another 1 minute before the opening range gets set. It's funny, I always say 1 minute before the opening range gets set for the 30-minute opening range. If any of you use different ones, then yours are probably already set. I haven't really heard of people using anything larger than, I'm sure somebody out there does, but not commonly do you see opening ranges larger than 30 minutes. They're usually smaller. Like I know the 5 is popular. I've heard of the 30-second opening range. I tried to trade the 30-minute opening range. Not for me. It's just anxiety inducing. And to me, you're just like at that speed, you're just trading against the algos. You're probably going to lose most of the time. Already getting a decent bounce there. That's a 100-point bounce off the lows there, right as the 30-minute opening range gets set. This little like low volume node here at 722, which is also the bottom of this delta zone. It's a little interesting. Just gonna scroll my DOM to the first place I'm kind of looking at. See a whole bunch of buyers in there too. You got a little sell imbalance there. You are coming back up to this imbalance from the overnight that we looked to see if they would hold, and so far they've just held it underneath it. Last price is moving so fast it looks like one of the little like things in a slot machine, which is fitting. Not real interested in being short. Everything we've talked about is like I think price wants to gravitate back up into the middle and the highest volume areas. So just interested in some kind of a pullback here. This would also kind of line up with this area that they held on a pullback last night before putting in a higher low and then pushing. So it's like 7. I'm going to call that whole area because we're moving around so fast that it's not going to be one price. We'll call that low volume node from 730 to 721. So it's about a 10-point range, but we're already getting pretty far past it. Right now, holding beneath that imbalance from the overnight. If we were in a different environment, I might be looking for a quick scalp reoffer there. Basically, would be from like 87 to this other imbalance, so like 30-ish points. But right now, my stop probably has to be 30 points. So um, it's not a trade that I'm interested in taking, and also don't feel like being short. I was hoping they would give a bit more of a pullback there, but buyers really pressing into that imbalance level. But I'm going to be very stubborn with the areas that I want to interact with this today. Um, I got whipsawed around enough at the end of yesterday's session. Like my P&L wasn't that bad. It was like a normal red day for me, but it was just kind of demoralizing. It's like I had at least 2 to 3 instances where I clicked the DOM and just like got immediately stopped out. Um, so some days your reads are just not good, and sometimes the market just like doesn't cooperate. Uh, I wanted to re, I wanted to look lower, and it just basically put in a low, and I guess you got one little tiny pullback right before the opening range got set, and then it just went. I don't know if we'll get back to 730 here, but still going to be the area that I'm looking at. I think this imbalance right in front of this zone is a little bit interesting too, but so right into this imbalance here. Like I said, I just don't like that level as much because it's still like right at, all right, now they're going to knife it into this zone. Okay. All right. That's the area that we're interested in, but I need for this to hang out here for a minute because it is moving so fast. So held it the first time, like 26-ish. You have a buyer that stepped in after it ran through, so there's a buyer at 24.50. Wouldn't be surprised. Oh, yep, I was going to say wouldn't be surprised to see them fill them. So they are trying to hold the area that I'm interested in. All right. I want to see. I'm going to try to get an entry around 720. If it holds again, stop will be basically right at 700. I want just a little bit lower, but not too low. Just right. Just because this might happen really fast, my plan is if I get long at 720, um, my stop's going to go to break even as soon as it gets back above this imbalance level, if it gets back above that imbalance level. So in this volatility, pretty good chance of getting stopped at break even, but um, just going to play defense. You can see it building a little bit of a shelf there. So I just want to see them test just a little bit lower. Getting so close, not giving it to me. Might be one of those. Oh, might get stopped real fast there. Not my best entry. It's exactly what happened multiple times yesterday too. So plan remains the same here. So above 750 if we get there, stop will go to break even. I'll probably give this trade a couple of tries, but not more than 2 or 3 if it doesn't work the first time. All right. See if we can get this back above 50. All right, and there goes my stop. Held it for a minute. I don't know, I think we got like 25 points in the money there before that happened. Wow, you're seeing some absorption happen right there at 650, right in front of the overnight low. Right now they got the overnight low by a single tick. I still stand by my thesis, which is that I think the market will eventually drift back up, but right now sellers firmly in control. You see this like little node that they made here at the bottom. Um, Something to pay attention to if we start to get momentum back up. Gonna assume that that was quite a bit. It was all done kind of all at once. So definitely some sellers that could be offside if we get momentum back to the upside. So you did put in some volume right near the low, but you did get a very nice taper past it. So Right now, not letting buyers get back into the opening range. Buyers getting a bit more aggressive there. You can see the color starting to change as the delta and aggression starts to switch over from selling to buying. It's still kind of neutral right now, but just because we keep holding it, I just want to take a look at 650. You see some pretty large selling that went on there. If it were to have gotten through the previous day's low, I'd be a little more interested in potentially looking at buying 650 on the way back up. But as it stands, it looks like we're consolidating and would not be surprised for them to try to send this down through the previous day's low. But Zoom out and see what that profile. The profile is like starting to put in more volume than what looks to be productive for the buyers down here. And this week's point of control is like right at 28K. So still think that is a magnet overall, but buyers don't have enough oomph right now to think about 28K. There's new lows there again. Previous day's low is right at 603.50. See if they let buyers, see if they let sellers just kind of get through all of these different levels. Would be very NASDAQ to stop everybody out at the previous day's low or anybody that has their stops there before uh, gravitating back into FOMC. Look at them hold that previous day's low like literally to the tick for like a 20-point bounce. Dare you touch it there. All right, that's through the previous day's low there. All right, so on higher time frame, let's see where we're trading. Looking back into, we're trading at these tops from the last week of April. Top edge of value for that week was like 27,472, so like another 100-ish points away. Would be like the previous week's high and or back here in April, so like the third week of April's high. Point of control for that week was like 27,400. We're kind of trading, starting to trade down into this low volume node here. So just some points of reference. I don't think this is worth stepping in front of right now. They really got through the previous day's low there, which is just happening because I was like, oh, I don't really feel like shorting today. That would have been the easy trade. Once again, doing a ton of volume very quickly as it consolidates down there. Just as this trade's lower, just talking about the trade that we took up here that didn't last very long. So we saw it hold 730 to 720 multiple times and get some decent bounces off of it. I knew that this imbalance level would kind of be the first place, and unfortunately, we didn't get quite there for me to put my stop to break even. But the reason I was really looking at that was really edge of value, low volume, little like pocket here, and that we'd held it multiple times. And to me, if we were going to push, we would push and start to gravitate back towards the higher volume areas up here. So, risking 20 points to probably first target would have been above this imbalance level here at 800. So 4-to-1 risk to reward. So, that's a trade I'll take most times and probably even take a couple of tries at. They didn't give me a rebid of 720. And when I like to kind of go through my own playbook here, let's say I got stopped and maybe it got like just below 700 and held and then came right back up to 720. I'm not going to buy it if it loses that level by that much. If it loses it by like 5 or 6 points, I should still be in. My stop should be far enough away. But if I get stopped and we get down here and it loses it by like 60 or 70 points, I don't want to rebuy that level because I would assume that anybody who spent a bunch of time buying that level, myself included, is either waiting to sell if they didn't stop out, or are looking to potentially reoffer that level. So if I wanted to buy 720 again on the way back up, I would probably want to see it come up, maybe poke through this imbalance level at like 60, and then come back and hold 720 again. And then I might try to buy it again. But I'm not just going to buy it the first time back up. Um, if it stopped me out, like let's say it just like, went a tick or two or a point or two through 700 and then got back to 720, I'd probably buy it a little faster. But um, yeah, just kind of talking through the playbook there. Trying to get back above the previous day's low here. I don't really see much from like a delta perspective. I just have sort of my overall drift back up thesis going on, but that's been hella wrong so far. So it's like a kind of like not enough for scalper IQ to flag it, but you have a bit of an imbalance there at 27,600 or some large selling at least at 600, which is right below the previous day's low, which they're trying to get it back above right now. You see some repetitive buying from large buyers here. This person, there's multiples right now. You see them stacking on the bid here. Not very far from price either. So they're all stacking right here at 600. You have about 70-ish contracts there, and they just pushed. So a rebid of the previous day's low is definitely productive. Kind of interested to see. I have a feeling they'll come back and fill these folks here at 600. Let's see what it does after that. Might just get away from them. Market likes to gravitate towards liquidity, so they definitely could leave these people behind, but um, And if I was going to take that trade that somebody just pulled one of their offer or one of their bids there, um, if I was going to take that trade, like based on seeing a whole bunch of buyers sort of stack there at 600, I would want to watch them get filled and then see what the reaction is afterwards, before I decided to join that party. But I wouldn't, for how I particularly trade and interact with large bits of liquidity, on the depth of market. I wouldn't, if it's trading, say it's trading like 608 or something, I'm not going to buy it there before these guys get filled. And even if I happened to have been long and saw that happening, I would have been apt to take that off near 50 or probably earlier because they're already back here again to potentially fill that order. And they just pulled it now, either pulled it or market ordered themselves in higher. So there's previous day's low testing. Just kind of a tap and hold. Buyers have managed to swing over the aggression and volume. You see the candle color shift over to blue, and it actually held blue on the pullback here. Um, so there's a little shelf starting to get built right at 600. There's a big buyer that flashed there for a minute. So there's some bigger players looking to try to interact with this down here. Impossible to know whether it's somebody trying to get long or somebody short covering. Doesn't ultimately matter. But buyers trying to draw a line in the sand here at the previous day's low as best they can. Trying to get long at 600. First target will be 50, 20-point stop. Seeing if buyers can hold the previous day's low on this retest. Nope, again. I am just on the wrong side of what this wants to do right now. Still interested in potentially buying that again. Um, just think that I think the play is back to the upside, but and that didn't get super far away from me. That basically took my stop and went. So if they get this back above 600, I'm probably going to bid it again. Basically same trade again. Nope. Um, so seller's still really defending previous day's low. I'm probably not going to try that again. Um, yeah. Did not think the market would want to try to get this directional from a sell perspective going into risk on from FOMC. We might still just be too early on in the might be too early on in the session for the drift back up idea. But the short side would have been a lot easier to play. I just think that we're getting extended, too extended, in my opinion, from uh, going into FOMC and earnings after, but the market doesn't care if I think that we're getting overextended. So they get another new low there. I have like maybe like 20 to 30 minutes left on this stream. If I see another good setup up here, I'll probably take one more trade. But that's 3 stops in a row for me. Um, this would be what I would be like a normal losing day. This is not like, um, you know, catastrophic loss on my part. Just trading a single micro. But typically, if I'm wrong 2 or 3 times, it usually just like doesn't get better from there. Um, so, and like this is an example of like this was actually a good example of rebuying the same price. So when it flushed, it literally got my stop by like a point the first time I bought 600, and then it got right back up to it. I'll buy that most times. Obviously, didn't work that time. But this is so far away from price, and we just put in a new low that if it comes up to 600, I need to see it trade like probably like 620 or 630, and then look for a possible hold on a retest. Just because my thought would be if we go all the way from like 60 points back up to the previous day's low where buyers were trying to hold, that we might have some kind of reaction off of that level again. And if any of you were shorting or on the sell side today, nice work. And this is just an incredibly hard last couple days of trading, in my opinion. This is actually cleaner today. I was on the long side, which just wasn't going to make money right now unless my entry was pretty perfect. Um, but um, it's at least directional. It's at least directional and not choppy. It is very fast, but at least it's pretty directional. You know, it's basically like every pop getting sold. So you could almost draw a trend line from there to there, almost to there. Um, so buyer's going to have to say no more at some point, and they really just haven't done that. I saw one of our members talking about just trading sim today. It's not a bad idea. I'm not trading sim. I'm trading a funded account. But I just when I trade sim, I'm just just an irresponsible maniac. There's really no purpose. Like if I could somehow trade in a way that you know was reflective of how I would actually trade, might not be the worst idea, but um, I need to see the I like need to have risk on. It actually helps me trade normal so that I'm not just like buying in random places and then, sometimes you're buying in random places and then sometimes it works and that just teaches bad habits in my opinion. So if you can trade sim and trade the same way that you trade live, then by all means, really good practice. But I don't tend to do that. And to me, part of the psychological part about trading is the the mental aspects of actually putting risk on and risking money. And for me, when that's not there, I just, you know, trade like a degenerate gambler because it doesn't mean anything to me. I don't like losing money in my I don't like losing money in my funded account, which I'm down 60 points right now. I took 3 20-point stops. So, like I said, not catastrophic, but it's not money that I'm like that I don't care about if I lose. I do care about if I lose. It's going to happen sometimes, but um, I need that. I need that like bit of financial pain um, to make me wait for levels to continue to manage risk to um, trade the way that I typically trade and the way that typically works for me. Um, it hasn't worked this session, and that's just going to happen. I think that one of the larger traps in trading that I fall into, and I think even experienced traders can fall into, is um, trading a particular way that works for quite a bit of time, and then 1 or 2 or 3 days that just whatever you've been doing just doesn't work at all. And 3 days is a blip in the market for time overall. So uh, changing up your strategy makes you move into a place that one, you probably don't feel as comfortable doing, and two, um, your strategy probably is still valid. Like most strategies don't just like die overnight. There's usually like a slow bleed, Now, if you've gone, I don't know what the cutoff is, but you've gone a couple of months doing the same thing and it's not working, or it's not working as consistently as it was, or you see like a distinct fall off of like, man, I kept buying rebids of imbalances and I was just like making bank in the first part of the year and now it's not working. Yeah, after a few months, you probably want to reevaluate or make some adjustments. After a couple of days, which I think is the the trap that a lot of newer traders fall into. It's just noise. It's just noise. It doesn't mean you shouldn't like, I can, once I get off stream, I'll like look at where my entries were. But honestly, I don't get too hung up on the sort of like, you know, evaluating a single red day. Like it just happens. I'm only concerned with red days that are really big, which I try really hard not to have. I think we all do. But to me, those are the ones that are like, you know, devastating to accounts. It takes away your morale. You know, if your average winning day, my average winning day on like a good day is probably like 100 and probably like we're talking like 75 points on on M and Q. That's like a good day for me. Um, and if I go out and lose 300 points in a session, like that's 4 or 5 days of winning days, which are probably not going to happen consecutively too. Like it'll take you a week or really more than an actual week to dig out of that hole. If I'm down $120 here, trading the 60 points on a single M and Q contract, like one decent day and I've made it all back plus some, which is also why I'm not super chomping at the bit here to take another trade. So that's, probably most of you that are watching know this, but if you don't, like risk management is, in my opinion, more important than like even good trade setups. Like you'll find if you trade markets most days, you'll find good trade setups. But just by simple observation, you'll find good trade setups. But if you can't manage risk, it literally doesn't matter. You'll blow up accounts, you'll get frustrated, and you might make some money for a little while when your setup is working perfectly. Um, I had one of the best weeks I've had this year, last year, or not last year, last week. Did really, really, really well across multiple accounts. And then this week, this will be my second, probably be my second losing day in a row. And so, you know, last week was up almost 400 MNQ points by the end of the week. So really, really, really good week. That's an outsized good week for me. And this week down probably about 100 points. So it works long term, but it doesn't work if I just get frustrated and start just like, you know, trying to force a green week, which we also know that like this is an incredibly difficult week for all the reasons talked about. I know a trader that I learned from actually took this week off. Any week that was big tech earnings, he just like didn't trade. And honestly, when it was, when I heard him say that, I'm like, as a newer trader, you're like, oh, but you're missing all the fun. You're like, no, he's not. He's not missing anything. I'm gonna try to get back above the previous day's low here. Um, like I said just a few minutes ago, like if I wanted to try that trade again, like a rebid of the previous day's low, they got to get it further past here and then come back and try to hold it. Because you saw they just rejected it the first time they touched it there. And so far, like a pretty clean pattern of lower high, lower high, lower high, TBD here. I want to see like 620, 625 um, to potentially consider a rebid on a test of 600. And like no level today, particularly on the NASDAQ, is like going to hold, um, like is going to hold perfectly cleanly. So it's always going to wiggle around a bit. You have a big buyer down here at 595 and a quarter. Some other big buyers stepping in there. You see a 12 and a 10 just got filled. But they just tried this a minute ago. They just tried this a minute ago, which is why I got long originally and it didn't work. So um, you got to see some buying above 600 before I think this becomes a valid trade idea. Otherwise you're just buying another higher low right into the previous day's low. So yeah, and that held the first time. So having these kind of triggers, to me, like I'll call them, I don't know, verbal triggers, right? Things that I'll say and be like, all right, I need to see this get above 625 and then see if 600 holds on a retest. That's like a sequence of events to watch for rather than just like, if it gets back to 600, I'm buying it. And you can, and sometimes you'll catch a momentum push to the upside. I find that like sort of like talking through sequences out loud of like, I want to see A, B, and then I might do C, right? Is like, keeps me out of trouble from just being like, oh, they're back at the level that I was just at. I'm going to buy it again. That's grounds for trouble for me particular. That's how I drift towards tilt behavior because inevitably it's probably going to take some time, even if it's just like 4, 5, 10 minutes to get this up to 625 if that's what it's going to do. And then there needs to be time to come back and hold 600 and see what happens there. So um, I just find that that's really useful for myself um, to keep me from just like constantly clicking buttons, which I think is what like the monkey brain wants to do. Um, so because that was a pretty clean hold of 600 there. They reoffered that, and you got just about 50 points depending on what your entry was there. So and buyers just so far have just like not just haven't held a higher low yet. You know, they're trying here, but they let sellers do quite a bit of damage. From the low, we're like almost 400 points from the point of control. So I'll probably be here for about another 10 minutes. I'd like to see if this trade idea plays out for 625 and back to 600 and then up higher. But there's just not, we're just not seeing, we're just not seeing enough buying happen for that right now. I will say that on this push, like you're drifting back and haven't rolled over the delta, but that kind of happened here as well. So this was another part of, I might not have said it live, but when I was looking at potentially when I got long at 600 a couple times, um, we had pushed and we were pulling back and we hadn't really flipped it over to the sell side, which just means that the volume and the delta from the sellers was less aggressive. which is why that color doesn't shift over. So I was kind of thinking less aggression, sell side coming back into that previous day's low was worth a couple looks at it, but just didn't hold. And back to 600 here. So buyers with a chance here to put in a higher low and try to get back above the previous day's low. And there they go. So like I said, I want to see like 25 to 30, maybe even like 40-ish. And that very much means that it could go without me. But I need to see that buyers are willing to put risk on above the previous day's low far enough that it's not just like at the previous day's low. Like, you know, I encourage most of you to look at these levels as like previous day's low. Sure, it's 27,603.50, right? But it's a zone, it's an area. It's not, you know, if you're using these studies that show these levels, like they have to put an actual price there. But like the previous day's low is an area, particularly on the NASDAQ. They have a bit of a low volume node above here. Um, could see this pop to 650 quite quickly. That's still not quite high enough for me to want to buy that on a pullback. I think they just barely touched 625 there. Here's 600, see if they hold it. Not super clean, but some buying. Not there. I mean, trying to hold a bit of a higher low there, but like 600 is not holding clean right now. It's a better trade from the underside, or has been for the last, 15 to 20 minutes. All right, so that's 630, and that's kind of like a bit of a higher low, at least on this 500 vol chart, and taking out a one of the pivot swing highs. So if we get a pullback into 600, which you can see somebody bidding 30 contracts there, I will definitely let that get filled on a pullback, and see if 600 holds on a pullback. So I'm getting the first part of my what I wanted to see, which is buying back above the previous day's low. We may or may not get a retest here, but I have to see the first part of that sequence play out before I decide that I want to put risk back on. So the second part of the sequence is, can they hold 600 on a retest? And at the moment, I think this 30 some contracts, it's not like a super huge order, but like given how thin the depth of market is, I think that the market will be inclined to gravitate towards that liquidity. So, um, but this is like the other benefit of those sequences, right? Is like I'm waiting for a specific thing to happen rather than, oh, I'm going to let it get above 600. And if you don't have something else after that, then your next sequence event is I'm going to FOMO in above 600, and that's not that's not prudent. So have to know that there's a chance that in part of your sequencing that you might just get left behind, and like that's 100% okay, particularly in an environment like this. So back to 600 here. They tagged the previous day's low, trying to hold it. That was not what I wanted to see there. Trying to hold. Not a super clean hold. Let's see if they touch it again. Pretty good hold. I just like what I didn't like seeing is, we got like almost 10 points, 10 or 12 points through 600. It's just not, that's like 3/4 of my stop. So not an abundantly clean hold of 600, which is also just indicative of how thin the liquidity is right now. See, now trying to hold it above 600, a little higher than I'm going to try to get in, but that might have been the look. Um, just came down a bit more violently than I felt like getting involved with. So still not completely far away from 600 here. The other thing that I don't want to see is I don't want to see us start to just rotate around 600, because that happened with a couple of my level reads yesterday afternoon, and I just got chopped trying to like buy above and then buy, get flushed and then buy it back above again. So just being abundantly patient here, especially since we're still near the opening range low and sellers have basically rolled it over from every pop that we've seen so far. I'm gonna get you up close to 50, which is nice. That's a nice trade there. It's 50 points. So it kind of looks just like, I mean, I'm still interested if we get back down to 600, but that was probably the scalp right there, because my stop would already be either in profit or at break even. Also, if you guys are watching, feel free to like the stream. That helps us get viewership up and helps, um, you know, get some more people in here, get a little bit more uh, buzz in the old chat. So if you like what you see here and you like watching me take 3 stops and talk to myself for about an hour and a half, feel free to hit the like button. So longest sustained buying of the from the buyers right now. Um, we're technically putting in some higher lows the um, on the 500 vol chart, but this is just like so granular that like, the swing high here, which they just barely poked their head through, and re-offered it right below the opening range low. Probably want to see, um, really needs to hold more than kind of one of these smaller pullbacks here. But I mean, sellers just came out with a lot more heat than I thought that they were going to this morning. I'm going to touch 600 again and knifed it. Yeah. No, thank you. The other parts that you can add to, like when you have certain sequences like that, like need to see it get above 600, need to see it go to 625, 630, and come back and test. You can also have, which is usually a good idea, to have the opposite side of a thesis, right? So you're like, oh, well, if we trade below, 550 again, then I'm just going to leave 600 alone, or whatever your particular trade looks like. Um, and if I'm thinking that there's a whole bunch of buyers, I want to see a whole bunch of buyers defending 600. Getting knifed by like 35 or 40 points there is not conducive to my thesis. So now they're holding under 600. And it's back above 600 again, but not back above the previous day's low. Yeah, now they're starting to offer 600. I think that's going to be it for me, guys. I don't like what I see down here from the buy crowd. It doesn't mean that I'm not going to get off stream and they're going to take it back up into value, but um, just not clean holds of anything. And I've been on the wrong side of trying to get long to catch some kind of drift back up into the FOMC announcement. And it just seems like sellers are, sellers are very much in control still. Um, so I think I'm going to call it there. Thanks everybody for tuning in. We'll be back again on Friday. Keep in mind, as we've talked about throughout this stream, we have FOMC today, as well as large tech earnings after the bell. Microsoft, Meta, and Apple and Amazon are all reporting within the next 2 days. I believe that it is Microsoft and Meta after the bell. There's also some chip makers as well. So just keep head on a swivel, manage risk, walk away from it if you feel the need to. And we'll be back on Friday to do it again. Cheers, everyone.